Friday
Yes.
prayer today.
Oh,
I mean,
yes.
I'm not going for the Friday prayer, but
Yes, right, right. I forgot about that. Okay, class. This is accounting theory class. We have the honor to be visited by Dr. Sharifa from UITM Malacca, from Malaysia. She will join a Zoom session with us, inshallah, today at 1st of March and next week at 8th of March. That's what we planned. We are going to discuss particularly on conceptual framework of IFRS and um, FASB. Okay. So I already informed her that there are 19 students in this class. You are the final year student, so you know the expectation that you already pass and understand the basic of accounting system, and so on, hopefully. And then now we are going to try to logically explain what we are doing, journalizing and everything during the preparation of financial statement. And I think which you would. I think I will ask you if you would like to have a more detailed introduction about yourself, Dr. Sharifa. I will maybe just turn off my camera later on if it's more convenient for you. I'm a bit conflicting actually. Should I attend or should I not attend? But the
it's
other lecturer said that okay, you should just sit there and attend. So that's why I'm here, at
it's
least to
it's
introduce you to the
it's
class.
up to you, Dr. Sani. If you feel
Okay,
you
then
need
I
to
will just,
take a
yeah.
rest, just rest. It's okay.
Okay, thank you very much. Okay, please turn on your camera if you have some difficulties, because there are Dr. Shariva, I think will be fully describing in English. I think so, right, Dr. Shariva?
I think as long as the students can understand, I'm okay.
Uh-huh.
If they want to, like, for example, discuss in Bahasa, that will be fine, not a problem.
Okay, so if you have some difficulties in the terms, you can interrupt and ask maybe explanation in Malay, right? Or you can take a note, right? And maybe we can also, the next session or the other time, we can also visit it again, some of the topic, if you are still confused or not sure about the explanation. I think that's the main purpose is for you to understand, especially the important topic of the conceptual framework of financial reporting. Okay, I will give the floor to Dr. Sharifah Hafiza. Please, Dr. Sharifah.
Thank you very much,
No
Dr.
worries.
Sani.
Yeah.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh to everyone. So I'm also I feel quite grateful that I've given this opportunity to um, share a little bit about the conceptual framework with you and about the topic for week 4 on accounting concepts conventions with the semester 6 students. I just copy paste. This is actually accounting theory for Bachelor of Accounting. And the code is AKT 1.62.7701. Okay, so I'm Dr. Sharifah Nur Hafiza. I've been teaching at UITM for quite some time, for about 23 years. So, and then I've actually prepared a short video so that, to describe a little bit about myself. So we will just watch the video first. Okay, that's a little bit about me. I always remind my students that I'm not giving you a lecture. I'm just a facilitator. I will just facilitate your learning process. So therefore, I welcome any questions, any comments, any ideas, any opinions, so that we'll be able to make sure that you have actually understood whatever that I have explained. So I really welcome your questions. If you would like to ask any question, you can just write in the chat box. Or if you feel like you want to ask directly, you can always turn on your mic and then you can always ask. Yeah. So there are how many of us? About 10. Probably during the session, we'll get to know each other. I will call names and, get to know each other. Okay. So I'm referring to the lesson plan shared by Dr. Sani. So for week 3, we are supposed to look at the conceptual framework. And then when I search and do a little bit of homework, I can see that Indonesia is also similar to Malaysia. We are following the IFRS. We adapt IFRS. So that's fine. Because when I look at SFAS, FSB, in Malaysia, we don't really, we adapt IFRS. So we don't really refer to FSB. So the statement of financial accounting concept, SFAS, that one is actually not really within our application. So, but I'm quite happy to see that Indonesia is also adapting IFRS. And we know the IFRS conceptual framework has been revised in 2018. The earlier version will be in 2010. So there are several changes that we need to update ourselves, and we are going to go through it today. So there are actually basically 7 things to discuss, starting with the purpose of financial statement, and then we go to basic assumptions, and then we have qualitative characteristics, which is very important to make sure that the reported information are very useful. And then we look at the elements of financial reports, how to recognize each of these elements and how to measure the element, and finally the concept of capital and capital maintenance. Because in the US, they don't really include the concept of capital and capital maintenance, but in IFRS, there is a section on a concept of capital and capital maintenance. So, and again, because we are on virtual platform, I mean, usually you are all very good because you switch on your camera. Basically, in my class, only a few will switch on their camera because and I have to understand, because I have to accept that, because probably they have some issues with the data. They don't have enough internet data and so on. So but here I think I'm quite happy because I can see my students. And again, if you have any questions, you can always ask, or you can always write your questions in the chat box. I'm not used to Zoom actually, Dr. Sani. I'm not using, we are using basically Webex, MS Teams, or we use Google Meet. So we don't really use Zoom. But I will try my best to make sure that I can actually deliver using Zoom. So can you see the slide? Yes?
Yes, ma'am.
Okay, thank you. So I should have asked this question earlier, just assuming that you have seen the slide. So we start with the purpose of financial statement. Here, this is very important because for accountants, when we prepare the financial statements, we must make sure that the financial statements provide information about the business entity, which are useful to both existing and potential users, basically investors, lenders, and other creditors, so that they will be able to make decisions relating to providing resources to the entity. So I refer to this slide about IFRS revised conceptual framework. So I copy paste several of the slides here. I also refer to the PDF file for the revised conceptual framework. So basically, for example, here, this is the revised. Can you see the PDF file? Does it change from?
Yes, ma'am, it changed.
Okay. Okay, that's good. So Zoom is quite practical also, yeah, for the online classes. Because I just share my slide. So when I switch from the slide to the PDF file, I hope you can also see the PDF file. So this is actually a good source of reference if you want to understand about the conceptual framework. So we have this document issued by the IFRS for the revised conceptual framework for financial reporting. So here you can see in the table of contents, they start with the chapter 1 is actually for the objective of general purpose financial reporting. So the details are all here. So if you want to read further, you can always refer to the PDF file. Now, when I switch to my slide, can you see the slide?
Sorry, ma'am.
You cannot see the slide.
We cannot see the PDF before, I think.
Yeah, okay. I've
switch to PDF.
So what do you see now?
We just see the slide of your PPTM PowerPoint.
The PowerPoint.
Yes.
Okay. So for the objective for financial reporting, here we have to make sure that the financial reports, say for example, when we apply every accounting standard, for public listed company, for public entities, they have to apply the accounting standard. And when we, as an accountant, when we record the transactions and we follow the accounting standards, it's basically ultimately we want to make sure that the financial reports are actually meeting this objective. This objective is actually stated in the conceptual framework, which is very important for us because we don't really produce something which is tangible like products, or we provide information. So we want the financial report to provide useful information for users in making economic decisions. So the decisions here, for example, these are actually being mentioned in the conceptual framework document, is decision about whether, because remember the accounting standards are actually mandatory, compulsory for public companies. So these public companies are issuing shares to the public. So audience or the users are actually wider because it can be anybody from the public. So therefore, they are holding shares. So what sort of information that they need to decide is actually relating to their investment, whether they want to invest some more, they want to buy more shares, or they want to maintain, they want to hold the shares for several years, or they want whether they want to decide whether to sell their investment or not. So these are all very important decisions for investors, for shareholders. And then for lenders, they want to decide whether they should lend money or not, provide loans or not. And for borrowers, they want to make sure whether it's better for them to settle the loans or not. Yeah. And the third one is relating to how efficient the management in managing, in stewarding the business. So this is actually measuring the performance of the management. So therefore, it's about
yang sama-sama kita hormati.
Di mana tu? Di masjid ke?
Okay.
Rivaldo. Okay. So in order to make these decisions, the users of financial reports, they need to assess the prospects of future net cash flow to the entity. So if they think that the future net cash flow that the entity will receive is actually going to be declining, probably they will decide that they will sell their investment. Yeah. And also assess the management stewardship of the economic resource, because we know the company, the owners of the company are actually separate from the management of the company. So that's why we have one concept, which is business entity, and there is a separation of ownership and management. So the management are actually an agent managing the company on behalf of the owners, the shareholders. Yeah. So shareholders, the business owners, they need to assess how good the management is in managing their money, in managing the business. So therefore, users need information about both economic resources, claims, and change in those resources and claims. So the economic resources will be assets. So we have current assets, we have non-current assets, and then claims will be liabilities. So we have current liability, non-current liabilities, and change in those resources and claims will be changes in equity. Okay. And also how efficiently and effectively management in managing the business. So this will be the performance of, we'll refer to the statement of financial performance. So that's why we need to provide at least 5 reports. The first one is a statement of financial performance of the profit or loss and other comprehensive income. And then we have the statement of financial position, or the old name will be balance sheet. And then we have the statement of changes in equity. And we have statement of changes in cash flow, and finally the notes to the accounts. So those are the main components of our financial report. And the objective of financial report is to provide financial information useful to users in making decisions. So when you want to explain about the decisions, you can actually include in these 3 important decisions that users are going to make. And in order to make good economic decisions, what they need to assess, and so what sort of information that they need. So far, so okay. Okay, anyone has any question? So that is why when we prepare, at the end of every financial year, we are going to close all accounts, prepare trial balance, make adjustment, prepare adjusted trial balance, and we prepare the financial statement. And we are going to send the financial statements to auditors to assess whether the financial statements are actually providing useful information to use true and fair view of the business or not. So the auditors, external auditors are going to do all the audit work to provide assurance that the financial report are actually useful, will be useful to users. So basically, auditors, not only auditors are actually looking into the whether the preparers of financial report are following all the accounting standards. They are also providing assurance to users in relating to whether the financial reports are meeting the objective of the financial reports or not, as per stated or required in the statement of in the conceptual framework. Yeah. So I think probably why don't we look at the conceptual framework and see what is it and what is it for first. So this is about the information in making decisions. So it's basically about the thing that I've explained just now. And of course, they are going to look at the, for example, dividends, interest payment, market price, market share price. Yeah? So they need to assess the amount, the timing, and the uncertainty of the future net cash flow to the business entity. And also the assessment of management stewardships. Yeah. So I think why don't we look at the conceptual framework so that you are clear on what is the conceptual framework and what is it for. So I actually I refer to this slide. So this conceptual framework, in contrast to the US, they are actually using rule-based regulation where they provide codes of accounting concepts and so on. But the IFRS, they are actually moving from rule-based to the principle-based. So they compile all these concepts in a document that what they call the conceptual framework. So this is very important. It's actually like a blueprint for both accounting regulators, accounting standard setters, and also the preparers of financial statement. So this is the framework is meant for the board, like for example, Indonesian Accounting Standard Setting Board. Like in Malaysia, we have MASB, Malaysian Accounting Standard Board, and ISB for the International Accounting Standard Board. This is the board that we are referring to, not the board of directors. So this board are responsible to develop standards and to decide whether to change, to revise any and amend any standards or not, depending on the complaints, feedback that they get from the regulator, the accountants, professionals, the users, the major stakeholders. Okay. And also it will guide preparers, the accountants, in deciding on what will be the accounting policy for the company. Can you give example of the accounting policies? These are the things that we can see in note 1 in the notes to accounts. Yeah, the accounting example of accounting policy. Akmal?
Yes, ma'am.
Can you share with us any example of accounting policy that you can actually as an example of accounting policy that the preparer will follow? Preparer here is referring to the accountants lah, the preparer of financial statement, which will be you in the future. When you work with a company, you are the one who actually implement the accounting policy. Example of accounting policy, anyone can share with us any example of accounting policy? Rifaldo, do you have any idea on example of accounting policy? What do we do when we have non-current asset, for example, machine. What do we need to do with machines for the accountants? We need to know the for example, furniture, tools, machines. We need to charge depreciation, right? So we need to know how are we going to charge depreciation. Are we going to use straight line method, declining method, sum of digit method? What will be the percentage rate? So that will be an example of accounting policy, which will be decided by the preparers. Okay. So for example, if the company is actually owning a pattern intangible asset, are they going to amortize intangible asset? So for example, for inventory, we need to follow the accounting standard for inventory, whereby we need to, for subsequent measurement for inventory, we need to compare the carrying value of the inventory with the net realizable value. So that is actually as per accounting standard. So the detailed mechanism that will be part of the company's accounting policy. Yeah. So the preparers, the accountants, they can also refer to the conceptual framework for guidelines or for deciding on what will be the most appropriate accounting policy. And to the rest, we are going to refer to the conceptual framework so that we'll understand and we'll be able to interpret the accounting standard. So the conceptual framework will address these three fundamental issues. The first one is the objective of financial, or I should have put this, the objective of the financial reporting, which is very important. We always start with what do you want to get from the financial report, okay? And then we move to what makes financial information useful. And then we go to detail. To the element of financial report, we have assets, liabilities, income, expenses. How are we going to recognize them, and how are we going to measure and present these important elements of financial reports? So all this will be addressed in the conceptual framework. For public sector accounting, of course, for public entities, we do have the accounting standard. For every, for example, in asset, we have non-current asset, we have intangible asset, we have investment property. So we have also, what do you call it? Investment, financial asset, all these, we have a specific accounting standard for each of the specific asset. And this accounting standard are developed based on the conceptual framework. Because here, why the ISB revised the conceptual framework, of course, usually because they get, complaints, feedback, suggestion from the stakeholder, especially from the accounting professional. So this is what will happen to accounting regulations. We are going to keep on updating the accounting regulation because the business environment has changed, correct? Now we know companies are actually embracing digitalization. We can see a lot of assets which are actually intangible, like for example, computer software, patents, copyright, and so on. And we also see that there are transactions we actually not which are new because of these changes in the way we are doing business now. So therefore, the conceptual framework has been revised and will be revised again in the future. So these are the main improvement. Here, first is because of we have this gap in terms of the concepts on measurement, presentation, and disclosure. Especially what should we report in the profit or loss, what should report in other comprehensive, OCI is other comprehensive income, okay? And then we need to update the definitions of an asset and liability and also the recognition criteria. So therefore, this will be able to clarify all this area, so that we'll be able to come up with better financial reports. Okay, so I want you to remember that the conceptual framework is not a standard. It does not override standard. Okay, it's just the framework that consists all these important concepts, which are very important for the board, which is responsible to develop accounting standard. So when they develop accounting standard, they are based on this solid conceptual framework. Okay, so we need to be clear that the conceptual framework will be the basis of the board decisions in setting standards. However, the board can actually depart from any aspect of the conceptual framework just in order that they meet the objective of financial reporting. Yeah. So what will happen when the revised conceptual framework was actually become effective? So it will affect the development of accounting standard, new accounting standard, as well as the revised accounting standard. So, and then it will be effective from 1st January 2020. Usually, we are given 2 years before it becomes effective. Yeah? So the effect, we will see the effect through future accounting standard. Yeah? So can you share with me any example of accounting standard that you are familiar with? You have learned accounting standard for property, plant and equipment, right? Have you learned the accounting standard for property, plant and equipment? Yes. For financial instruments, for investment properties, for revenue, for example. Yeah. So in the future, when these accounting standards are revised, they are going to be based on the revised conceptual framework. So these are the ones that we have actually go through just now. So these are the important element in the conceptual framework. Just now we know the financial report should provide useful information to users so that it will help users to make economic decisions and what sort of decisions. And then in order to provide useful information, we have to make sure that information possess these qualitative characteristics that is actually relevance and faithful representations. So when I did my PhD, I looked at how the IFRS change or influence the qualitative characteristic of financial information. So I use modeling, and what I found is that once we adopt IFRS, it will increase the predictive value of financial information, meaning to say, when users rely on the information, it will help users to predict what will happen to the company in terms of future cash flow and so on. But at the expense of what we call it, but because we are moving away from historical cost to fair value accounting, so therefore we are going to bear the cost, which is actually in terms of now accountants need to use a lot of professional judgment in coming up with the figures and so on. Yeah. So at the expense of the verifiability of the figure. Yeah. So here, the fundamental qualitative characteristics will be relevance. What relevance mean? If you say, okay, I need to get some relevant information to decide when I want to go for holiday, for example. So what sort of information which is relevant? For example, you want to find out about what will happen to the traffic's volume, what will happen to the weather, what will happen to the so those are relevant. Relevant meaning the information is capable of making a difference to the decisions made by users. So for example, if you want to decide whether am I going to bring an umbrella or not today? So you check the weather forecast and see whether it's going to rain or not. Kan? How's the weather there in Padang? Is it hot?
Yes,
Is
ma'am.
it-
It's hot, ma'am.
Excuse me, ma'am.
Yeah, the weather
I'm
is
sorry
getting
for-
hotter, right? So hotter. Similarly, in Malaysia is very hot. Therefore, we need to bring umbrella or bring our sunglass if you want to go out. So those information is very relevant. So here, relevant means the information is capable of making a difference to the decisions made by users. Yeah. So if users want to decide whether to buy new shares or not, they want to know whether the company is actually going to provide attractive returns or not. So they will
sorry,
find out
ma'am.
about the profitability of the company, for example. Yeah.
Ma'am,
And the
ma'am,
information must be faithfully represents the substance of what it purports to represent. So that will be the faithful representation. And these qualities are actually enhanced by comparability, verifiability, timeliness, and understandability. Yeah. So we also bear in mind the cost constraint. So if it is going to be very costly for the company to apply that particular accounting requirement, the company can actually decide not to follow that particular accounting requirement, but they need to justify, explain why. Okay.
I'm sorry, ma'am.
Yeah.
I think your presentation is stuck in 7th slide.
Okay. So it doesn't move here.
Yeah, it doesn't switch on PDF.
Oh no, this is not PDF.
But
Still
it's
slide
still slide number
7.
number 7.
Thank
Yes.
you very much. I will just reshare. Thank you very much. Let me see. Can you see it move now?
Yes, we can
Yes,
see its conceptual framework.
Okay. Thank you very much. I have actually made my disclaimer just now because I don't use Zoom for my online classes. But like in UITM, we are actually we don't conduct online classes anymore. We do physical classes because majority of students will be able to learn better during the physical classes. So that's why. But in the past, during the pandemic, we don't use Zoom. We use basically Google Meet or WebEx or MS Teams. Yeah. Okay. So you don't see this slide just now, yeah? So this is actually about what is the conceptual framework. So this framework is a practical tool. It will guide three important group of three parties. The board here is referring to the accounting standard board, the board that develops standard. Like in English, in Indonesia, what is that board? Is it DSAK or PS? In Malaysia, it's called MASB, Malaysian Accounting Standard Board. But in in Indonesia, it's called
ASK.
ASK. Okay. And the preparers here are referring to the preparers of financial statement, which will be you in the future. Once you graduate and you join, you join a company, accounts department of a company. So you are going to be the preparers. Okay. So the conceptual framework will address three important issues, which is the objective of financial reporting and how to make financial reporting useful and what will be the element of financial report. So we have assets, liabilities, income, expenses, and equity. Yeah. So these are because we know the earlier conceptual framework is actually the 2010 version. So in 2018, which is actually 4 years ago, not 4 years ago, 6 years ago, the conceptual framework was revised, right? Because we know the business environment changed, so the conceptual framework become out of date, it become incomplete to cater for new business transactions, and will become unclear. So these are the main improvement, yeah? And we can see all this improvement in the new accounting standard. So it is very important that you are able to differentiate between a standard, an accounting standard, and the conceptual framework. So the accounting standard they have legal authority where every company must make sure they follow the approved accounting standard. However, the conceptual framework is just a guidance, yeah. Why it is important for accounting students to learn about the conceptual framework? It will help you to understand why the accounting requirement is as such, yeah. Because the conceptual framework guide the body that develop accounting standard. So it will be the important basis of the board's decisions in developing standards. Okay, so it's just a guidance. So the board can actually choose not to follow the conceptual framework if they think that it's actually important in order to make sure that they will be able to develop accounting standard, which is actually important to meet the objective of financial reporting. Yeah. So we have actually gone through this slide just now. So we are here. This is the slide you have not seen just now, right? So I think we are going to, next week, we are going to look at the quality, what are the qualitative characteristics that which are very important to make sure that the financial reporting are actually providing useful information to users that will help users in making decisions. Yeah. So the fundamental qualitative characteristics, there are two. The first one is relevance. Second one is faithful representation. So relevant, you always use this word kan, that's not relevant, it's relevant, that's not relevant, for example. So relevant is actually, it means the information, it will be relevant if it is capable of making a difference to the decisions made by users. Yeah. So for example, if you want to buy a new baju for Raya, of course, you will you are not going to buy swimming attire, for example, which is not relevant for Raya, right? So therefore, if your friends are sharing, oh, there is a new shop selling swimming suit, that will be not relevant, will be irrelevant to you, yeah? Because your decision is you want to buy a new baju Raya, for example. Lebaran, yeah, Lebaran, you call it Lebaran, right? So in Malaysia, we call it Raya. Okay, so faithful representation here, that's why when we record any business transactions, we have to make sure that we have the supporting document. For example, for any bank transactions, we are going to refer to the receipt, for example. Yeah? So because it is very important that we make sure the information has faithfully represent the substance of what it is purport to represent. Yeah. So these two are the fundamental qualitative characteristic. Remember, what is our product? What is our what we are going to produce? Information. Yeah. It is very important that we make sure the informations are useful to users. If not, users are not going to demand for accounting information. And in that case, accountants will be out of job. Yeah. So we'll make sure that users can rely on the information, our financial reports. Yeah. So the enhancing characteristic will be comparability, verifiability, timeliness, and understandability. And we have to bear in mind there will be cost constraint for company when they want to apply the accounting requirement. It will incur costs. So there will be this cost benefit analysis as well. Yeah. So for faithful representation, the information, these are the quality that we are looking for. Yeah? Prudence, measurement uncertainty, and substance over form. So what does it mean by prudence? Here, we are being very careful of any conditions of uncertainty. Yeah. So what we have to make sure that we will make sure that the information that we provide is actually as accurate as possible, meaning it will not be overstatement or understatement of either assets, liability, income, or expenses. So it will support neutrality. Yeah. This is especially when we are looking for provisions, yeah, whether we need to recognize provisions or not. Because say, for example, provisions for compensation. So if the company is being sued by customer, we need to assess whether the company will have to pay, liable to pay or not, any damages suffered by the customer. So we are being prudent. We are taking we are going to do due diligence. We are being very careful. We are looking into all sort of conditions of uncertainty. Yeah. And then for measurement uncertainty, because if we are following historical costs, when I was a student, which is actually, many years ago in the 90s, we are following historical costs. We have no issue with measurement uncertainty because when the transaction occurred, we refer to what has been agreed, what will be the transacted price, historical cost. Yeah, there's no issue for measurement uncertainty, but that method is no longer suitable for the current business environment. So we are moving away from historic, because if we are providing historical costs, the information that we provide will not be relevant. Yeah, because it will be too different from the current cost or from the market cost, market price. So we are now embracing fair value accounting. There will be uncertainty when we want to determine the amount. Yeah. However, therefore, the preparer, the accountants, they need to exercise their professional judgment in estimating the amount. Okay. So reducing the measurement uncertainty. So if the uncertainty is very high, the information will no longer sufficiently faithful representation of that particular item. Yeah. So this is actually which is actually very important. It will contribute to the faithful representation of that amount. Yeah. And the third one, substance over form. I think, are you familiar with substance over form? Not familiar. Form is referring to legal. Substance is referring to the reality of that particular transaction. So here economic substance will be the underlying economic phenomenon, which is actually this usually we are in a dilemma whether should we report something which is actually representing the substance of the economic transaction, or we need to if they are the same, there will be no problem. Yeah. So, but if they are actually what do you call it, too different, then we are in a big dilemma whether the amount should be reflecting the substance ataupun the reality of the transactions or its legal perspective. So this is actually another thing that we need to consider when we looking at the accounting transaction. Yeah. So in the conceptual framework, you will see sections for the element of financial report. These are the 5 important elements. We have asset, liability, equity, expenses, and income. Yeah. So a definition of an asset, what is the definition of a liability, and what will be the definition of income and expenses. So here when we look at income, we have this accounting standard for revenue. We have where we have that 5 steps, step 1, step 2, step 3, step 4, step 5. Only then we recognize revenue. So, which is actually very different from accounting practices in the past, before we have this new IFRS for revenue, for income. Yeah. I think we are going to look at this later. And then in the conceptual framework, as also we have this recognition criteria. For which is actually relate back to the fundamental qualitative characteristic just now. So for relevance, that's how we look at the probability of the economic benefits. Yeah, and then we are looking at the amount, whether it can be measured reliably or not. Okay. So for faithful representation, here also we now we not only in terms of measurement and recognition, we also look at the presentation. How are we going to report the information? Yeah. So we also always see cost constraint there. So all these are actually being limited by this cost factor. So we need to consider cost factor as well in terms of providing information which is, relevance and faithful representation. Okay, I think what we will do now, we'll take a break. Usually for online, I know it is very exhausting to students to just listen without any activity, kan? I understand that. Usually I will give my students a break lah, 5 minutes ke 10 minutes ke, so that you can, what do you call it, before we continue. But I think what I will do, I will just go through this is, and then measurement, and then about PNL. I will repeat this later, and that's all. So these are the important part of the conceptual framework. So we are going to relook at it later. So what I want you to do is, I think we just check PSAK. Okay, thank you so much, Rifaldo. So it's PSAK. P stands for, what is P? Perbadanan. Is it perbadanan?
Kan.
Rifaldo? Ini abbreviation. Yeah. PSAK. So P is, what is P? Stands for perbadanan. Is it perbadanan?
Pernyataan.
Penyataan.
Pernyataan.
Oh, okay. S?
Standar.
Standard. A,
Akuntansi
account.
keuangan.
Oh,
Akuntansi
NK?
keuangan. Keuangan.
Keuangan.
Akuntansi keuangan.
Accountancy keuangan. Okay. Thank you so much. let's take a break. We'll see again after. Is 5 minutes okay? Okay, thank you very much. We'll take a break for 5 minutes and then we'll continue. Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So how are you now? Is it okay? I mean, do you have any question? Kartika, are you okay, Kartika?
I'm good, ma'am.
Good. Kita kan Malaysia, Indonesia kan satu keluarga. Tak ada beza. Sama saja. Even myself, we do have, I mean, if I trace my family back, there are some connection with some part of Indonesia. So it's actually very common in Malaysia. You see, like in one area, they are related to probably Jambi ke atau Riau ke kan. So I've never been to Padang, but I've heard that Padang is such a nice place to visit. So is it near the sea, or is it, I mean, I can always check the map, right? But people always go to what do you call it? Bukit Tinggi? Is it Bukit Tinggi?
Yes, it
ma'am.
is.
Bukit
Ma'am.
Tinggi.
ma'am.
Bukit
Yes.
Tinggi is near Padang. Is it correct?
No,
Not
2
near.
hours
yeah,
from
from Padang.
2 hours.
2
trip.
hours.
2 hours,
Oh,
ma'am.
okay. So Indonesia is very huge. I've been to Makassar, I've been to Bandung, Jakarta, Medan, very near to Malaysia, but not yet. Padang, not yet. So probably insyaAllah in the future, I will go and visit Padang. Tapi kita semua sama, tak ada beza. Kalau tengok orang Indonesia, orang Malaysia sama saja. Kan? So it's good that you are, studying accounting, because accounting is very relevant. For example, if we look at the job market, when I look at my students, once they graduate, everybody will get a job. So there are always jobs for accounting students. But the course, the program is quite challenging. I know, because you have to be very, dedicated, committed, because you have to read, you have to write, you have to discuss, you have to argue. So it's very challenging, but the reward is very good. So you are now in semester 6. How many more semesters you are in your is this final semester, or you have one more semester? When are you going to graduate, Marsha? Don't know. How many semesters? How many semesters do you have?
In
Uh,
our
eight,
university, I have
semester in UNP, 8. 8.
Oh, 8. 8. Oh, okay. So you have semester 7 and semester 8. And you have to go and I mean, what do you call it? Do you have to do your practical training?
Yes, ma'am.
Ma'am.
Yes.
Yes.
Or they call it internship, kan? You go and work for
Yeah,
several
internship.
months internship. Because I can see that you have not done your internship.
No, we haven't, ma'am.
You haven't. Because usually I see a huge, there will be a huge change in my students in terms of their attitudes and so on after you come back from your internship, because when you do your internship, you will see the reality of accounting profession. And then when you come back, you have to, work harder so that you will be, you'll be able to perform later when you work. So it's very important. Internship is very important because you're all learning about concept. Actually, accounting theory is very dry, right? Theory. So your final exam is going to be an essay question or multiple choice? Do you know about your final exam? Essay.
Mostly easy.
Mostly essay. Okay. So you have to get used to argue, write your argument and so on. Okay. So we are going to continue with the basic assumptions. So the first part is actually purpose of financial statement. So you can refer to the conceptual framework. This is the most important part. In chapter 1 will be purpose of financial statement. And we know it's actually the purpose of the financial statement is to provide financial information. What do we provide? Financial information about the reporting entity, about the company, about the business that is useful to whom? To both the existing and also the potential investors, lenders, and other creditors. Useful in what? Useful in making decisions, yeah, relating to providing resources to the entity. So you can refer to this slide. I've shared the slides. You can always refer to the slides. So we go to the second one, which is basic assumptions. For financial accounting and reporting, it is very important that we bear in mind these assumptions. The first assumption will be accrual basis, which is actually, we know why do we, when we recognize electricity expenses, why do we have to refer to the bill that we receive? For example, for the year 2023, we are going to get all the bill for electricity for the year 2023. We total up, that will be the electricity expenses for the year 2023, regardless of whether we have paid the bill or not. So this is because we are following the accrual basis. We are going to recognize transactions and events based on the accrual basis, meaning we are going to look at the economic reality of that a transaction. Is it for 2023? If it is for 2023, we are going to recognize it in the 2023. So we focus on the timing of recognition rather than the cash flow. So if we have not paid the electricity bill, we are going to charge electricity expenses, say for example, 300,000 rupiah for the year 2023. And then we are going to credit our accrued electricity costs. So if we have paid, we are going to credit bank. So this is very important. Accrual basis, sometimes it's called matching basis. We match the expenses against the accounting period. Yeah. The second one is going concern basis, which is also very important. When we use going concern basis, meaning when we prepare the financial statement, we are preparing the financial statements by assuming that the business entity or the company is going to operate in the near foreseeable future, meaning the company will still be able to operate, to exist for this year, next 2 years, next 2, 3 years, all right? So that is what we call going concern basis. So when we prepare the financial statements, we are recognizing the transactions, the business events, using a particular, what do you call it, conditions due to, say, we measure our property, plant and equipment. Take, for example, we acquire machine and we record the cost, the acquisition cost, the initial cost of the machine, for example, is 1 million rupiah, for example. Yeah. And then we are going to deduct depreciation, yeah, In year 2, we are going to deduct depreciation in year 3. So we calculate the carrying amount and we report that in the statement of financial position. We are doing that because we are assuming that the company is going to stay in the business for the near foreseeable future. This is actually going concern basis. Yeah. Otherwise, for example, if the company is bankrupt, is going to close down, we are no longer assume that the company is going to go concern. There's no going concern basis. So we have to use the liquidation basis, meaning for the machine, we have to report machine at the current cost or the market value, the market price. So we can no longer report it based on the carry amount. So this is very important. Yeah. So if the company is bankrupt, is going to close down, we are going to use different basis. For example, if there are indication that the company is in a financial distress, they are going to be liquidate, meaning the assets are going to we need to sell all the assets in order to pay all the liability. So in this case, that the company is no longer undergoing concern basis. We need to use different basis. Okay. So are you okay with that? Akmal, are you okay, Akmal? So all 19 of, I don't know how many of you here? 22. So I think everybody is here. Eh? That's good. Okay. So if you have any question, you can always write in the chat box. Then we move to just now the qualitative character. The third part will be qualitative characteristic that are very important to make sure that the information that we provide in the financial reports are useful. So we have actually discussed about relevance and faithful representation just now. So relevance here, it means the information is capable of making a difference to the decisions made by users. And faithful representation, meaning information must faithfully represent the substance of what it purports to represent. So therefore, and we are going to make sure that the enhancing characteristics are also there. So we also discussed about the clarifying aspect of faithful representation just now. So, and we move to the fourth part, which is the element of financial reports. These are the 5 important elements. So in the conceptual framework, you will see in chapter 4, the element of financial statements. So what are the element of financial statement? Remember these 5 elements: asset, liability, equity, income, and expenses. So if you understand about this element, you are going to be able to understand why we need to prepare the statement of profit or loss and other comprehensive income. Yeah. So the statement of profit or loss and other comprehensive income basically will report on the change in economic resources and claims. The change, yeah, the changes that reflect the financial performance. So these changes are actually basically income and expenses. So income for 2023 minus expenses for 2023, we are going to be able to calculate the profit for the year 2023. So when we look at income are actually any increases in assets. If our asset increase, it means we actually earn additional income. Or any decrease in liabilities that results in increase in equity. I think you are familiar with accounting equation, right? I cannot write on my screen. It's asset equals liability plus equity. So if we expand the accounting equation, we'll be able to get here, if I draw, remember the accounting equation, assets. Oops. Here, Untitled section. I'll just undo. Undo, cannot. If I draw, remember asset, this is actually asset. In accounting equation, asset is equals to liability plus equity. So this is for the statement of financial position. That's why in the balance sheet, a statement of financial position, we have assets. Of course, we are going to report separately current assets and non-current assets. And then we have total up. The total asset, it must equal liabilities and equity. It must be balanced. Yeah. So any change in asset, any change in liability that will lead to increase in equity, that is what we call income. Yeah. So if we expand this, we'll be able to get asset minus liability belongs to the owners, which is the equity. Can you see that I'm drawing the accounting equation? Yes. So any change in asset, any increase in asset will lead to increase in equity, correct? If asset increase, equity will also increase based on the accounting equation. So, and if we have a decrease in liability, that will also increase equity. Because we know income minus expenses, we cannot use expenses because that will be conflict with. So say for example, we take, I use R for income. Revenue minus expenses, this is profit, and it belongs to the owner. So it belongs to the, we are going to add here. Yeah. So this accounting equation can be expanded, and you'll be able to see that any increase in asset will increase equity. Any decrease in liability will also increase equity. So these are actually what we call income. Other than those relating to contributions from holders, meaning other than when owners are contributing additional capital. So if it's from the business operations, that will contribute to income. Expenses, this is where decrease in asset. For example, when we pay electricity bill, what will happen to our money in bank? It will be decreased. Yeah. Or increase in liability that result in decrease in equity based on the accounting equation. So that is actually expenses. If we mention about claims, these are actually liability. It's actually claimed by external parties. For example, the creditors, the suppliers, the bankers, the lenders. Yeah. This is a present obligation of the entity to transfer an economic resources as a result of past event. So for example, if we purchase a motor vehicle on credit, so we have an obligation to pay for it later. Yeah. So as a result of past event, when we purchase the motor vehicle, that will be the past event. We didn't pay it because we bought on credit, we purchased on credit. Now we will record a liability, which is actually accounts payable. Yeah. Debit motor vehicle, credit accounts payable. So accounts payable will be a liability. We have a present obligation to pay for it later. Yeah. By transferring an economic resource. We have to pay, for example. Yeah. Equity is actually claims by the business owners, by the shareholders. So there are any residual interest in asset belongs to the business owners. Yeah. So when we take asset minus liability, this balance actually belongs to the business owners, to the shareholders. So that will be equity. Economic resources, they are all assets. And we have assets, meaning according to the conceptual framework, assets is where we have a present economic resources, present, yeah, not in the past, controlled by the company as a result of past event. So these economic resources is a right that has the potential to produce economic benefits. So for example, you deposit money in your bank account. You have, it belongs to you, yeah, present economic resources. When you deposit in the bank account, that will be the past event. And you have the right to all the benefits. You can use the money later. So that will be economic resources. So here, these are the definition. In the conceptual framework, you will see the definition of elements of financial statement, which will be presented, reported in the statement of financial position. In the past, we call it balance sheet, but now it's called statement of financial position. So we are going to report on asset, and it must be the total asset must equals to the total liability plus equity. Yeah, it must be balanced. All right. So when you do your statement of financial position, if it is not balanced, you have to find out why it is not balanced. Make sure all the adjustment you have do it in two items. If you debit asset, you must make sure you credit something, yeah, another account. If you miss one entry, then your statement of financial position will not be balanced. Yeah. So the asset, again, is the present economic resources controlled by the entity as a result of past event. So the economic resources is your right, yeah, for the potential benefits from current and also in the future. Liability is about present obligation, yeah, to settle that particular liability. So it's legal, you have no choice. The company they have to settle the obligation by, for example, paying the account payable. Yeah? And equity will be the residual interest in the asset of the entity after deducting. So we have assets minus liability, that will be equity. Yeah? So we know that there are financial instruments that possess both liability characteristic and equity characteristic. For example, have you ever heard of redeemable preference shares? A company, when they need money, they issue shares. So shares, there are different types of shares. We call common stock. Do you call stock or you call shares? Stock.
Common stock.
If you're common stock, so you're following the US terminology. So stock, there are common and there are also preference stock. Common stock are actually equity, yeah. But for the preference stock, if it is redeemable preference stock, so we need to calculate how much is actually liability, how much is actually equity. When we report, we need to report it separately, yeah. Okay, so these are the references. I'm going to share with you later because I don't know whether it will bring us to the PDF file or not. We have taken a break. And then for statement of financial performance, these are the two, we are reporting on income and also expenses. Yeah. So this is very important for us to assess the performance of the company, whether the company is doing better or getting worse. Now we are actually, 2020, 2021 were very bad for the business, betul? Because of the pandemic. I don't know about the Indonesia, but in Malaysia, we cannot go out from our house. We are being confined, that is restricted in our movement during the pandemic 2020, the year 2020, the year 2021. So all shops were closed. So they are suffered because they they have to close the shop, they didn't get any income, they have to pay the expenses. So we can see that during the COVID-19 pandemic in the year 2020, in the year 2021, business are reporting very bad performance. But now business are recovering. Yeah. How do we know? We can refer to the statement of profit or loss. So in the statement of profit or loss, they are actually reporting on the income and expenses of the business, which is very important. Any of you who are interested to become entrepreneurs, this is about business, it's about making more money, right? So it is very important that you are able to get income from your business. And your income should be bigger enough to cover all the expenses. Okay? And then in chapter 5, in the conceptual framework, is about the recognition of the elements just now. When are we going to recognize asset? When are we going to recognize liabilities? Yeah. And then once we see that we must recognize asset, then we move to how do we measure asset? Yeah. How do we measure? And then how are we going to report the asset, for example? Yeah. So these two are the two condition, the recognition criteria. First, we look at the probability of future economic benefits. Is it probable or not? If it is probable, we move to the second condition, which is we look at the cost or value. Can we measure the cost of or value with reliability or not? If yes, then we are going to recognize the elements, either assets or liability. Yeah. So again, for the recognition criteria, these two are the important characteristic that we are trying to, the reason behind the recognition criteria. We must make sure there are relevance, and we know there are factors that are going to affect the relevance of the element, which is the probability of a flow of economic benefits, and also the existence of uncertainty. Yeah. Okay. And then for in P&L, statement of profit or loss is the main part of our statement of financial performance, is the source of information about performance. So if you want to find a job, you want to look a place for internship, always check the statement of profit or loss and see whether the company is able to pay you your internship allowance or not. And so of course, you need to look for business which is actually financially secured. So it is very important. So where do we we are going to prepare the statement of profit or loss in order to report on the performance of the business. And this is where we report all the income and expenses. In other comprehensive income, we are going to report on the exceptional items such as any when we revise any revaluation surplus. Yeah, where for example, your company has one building which is in a very strategic location, and you adopt revaluation method. So when you revalue the building, you can see that the fair value is now higher. So you are going to debit building, credit asset revaluation reserve. So we are going to report this in the other comprehensive income. Because probably in the year 2023, when we revalue our building, the market value has now dropped. So therefore, these are actually only, oh, my internet connection is unstable. So what I will do is stop my video. Yeah. Okay. So, so therefore, what we report in the other comprehensive income will be only change in current values of assets and liabilities. So these are due to exceptional circumstances. It is not because of the company business operations. Yeah. So, and these items are only temporary. It will be recycled. Yeah. Okay. So, and then chapter 6 is on the measurement of financial report element. So for the measurement, we have historical cost, fair value or fulfillment value of an item being measured, which is where I think you have done this. When we have a transaction, we are going to see whether the transaction item meets the recognition criteria or not. What are the recognition criteria? There are 2 recognition criteria. We look at whether if it is an asset, whether the benefit is probable or not, will flow to the business entity. Second, we look at whether we can determine the value of the asset reliably or not. Yeah. So when we check the recognition criteria, both recognition criteria are fulfilled, then we move to how are we going to measure it. So in the conceptual framework, the measurement basis is an identified feature. For example, historical cost, fair value, fulfillment value of an item being measured. So for the basis, there are several bases: historical cost, current value, entity-specific assumptions. For historical cost, this is actually, for example, when we purchase our merchandise, our goods, trading goods from a supplier, and we are going to get the invoice based on that transaction, and we're going to record the inventory based on that amount. That is actually based on historical cost. Yeah, this is actually the original transaction value of when the asset or liability was actually acquired or incurred. And it is very straightforward and objective. We have no problem with historical cost in terms of its reliability, faithful representations, and so on. But we have an issue with relevance, because historical cost will depart or will be very different from the current value. Okay. So for subsequent measurement, usually we are going to consider current value, where we are going to use fair value. For example, when we purchase a building for investment, we rent out the building. Yeah. So we are going to record at initial cost. That will be historical cost. But at the end of the year, we are going to find out what will be the fair value of the building. And we are going to adjust the carrying amount. Yeah. So this is based on current value. All right, and then entity-specific assumptions. This is very important when we calculate value in use for asset and fulfillment value for liabilities. So the value in use for asset will be the present value of expected future cash flow. So if we use the asset, what will be the value in use? So we are going to, there are methods that we can use. We can estimate the cash flow that we get from using the asset. So we just total up, find its present value, and we'll be able to get its value in use. This is important when we look at non-current assets. For example, property, plant, and equipment. For example, we have a machine, and suddenly our machine has been damaged. So we have to find out what is its value in use. So we are going to compare the value in use with the fair value less cost to sell. Fair value less cost to sell is easier to find. We are just going to find out if we buy a machine, this particular machine, how much are we have to pay? That will be the market price. Okay. We compare the two, and we are going to choose the higher amount. That will be the net realizable value or recoverable value. So we are going to see whether we need to adjust the carrying value. So this is actually entity-specific assumption. Yeah. So fulfillment value, this is for liability. If we have accounts payable and we have to settle the accounts payable, how much? is the amount required to settle the accounts payable. Yeah. And then we have cash flow based measurement. These are the techniques which actually will be different from one business entity to another. Yeah. So which one is more appropriate will be used by that particular company or business entity. So for measurement, historical cost measurement basis is very straightforward, very objective. We just refer to the document for that transaction. But for current value, we are going to find out what is the market value or the fair value, value in use, fulfillment value, and current cost. Okay. So again, this concept of relevance and faithful representation are going to be the fundamental qualitative characteristic that guide us in deciding which basis is more appropriate. Yeah. So for relevance, we look at the characteristic of the asset or liability and its contribution to future cash flow. For example, if we look at investment property, it is actually more appropriate. It will provide relevance information if we are going to use fair value. But if we look at the machine, we know machine, we use machine, the wear and tear, the value of the machine. If you buy machine, which one will be more? If you buy a handphone, which one will be more expensive? The new one or the pre-loved or the used one, second hand? Which one is cheaper?
The
Second
second hand.
hand.
Second hand.
Yes. So because of that asset, yeah. So for handphone, for example, we are going to use historical cost, yeah, which is more appropriate, yeah. And then for faithful representation, we look at the measurement inconsistency and measurement uncertainty, yeah. All right. So the change in the value will be reflected in the statement of financial performance, and the carrying value are going to be reported in the statement of financial position. And last, do you need a break? You need another break, or is still okay kalau we finish off with the last part? Are you all still okay? I don't know whether I'm making you more confused or you learn something today. If you have any problem, I appreciate if you, share with me so that I can actually clarify or explain about it again, yeah? So, because I don't have access to your, you have your reference book or your textbook, but I'm not able to, I'm not able to get access and read your reference book. Your reference book is actually Teori Akuntansi, right? Perkayasaan Pelaporan Keuangan, Suardijono. Yeah? And then we have Mirza Abbas Ali Hawk Graham. This is actually Practical Implementation Guide and Workbook for this one. I think I'll be able to read. Okay, anyway, so chapter 7 is on the concept of capital and capital maintenance. When we look at a company, any business entity, if you want to set up a business, you need capital, right? How are you going to get capital? Probably you save money bit by bit and you have enough money to set up your business. Yeah. So this is the capital that you need in order to set up your business. So when we do financial accounting and reporting, we have this concept of capital and capital maintenance. Capital will be the equity. Okay. So this money is, you need money, not only equity, it can also come from liability. Say, for example, you borrow money from the bank. So that will be your liability. So you need money to acquire assets, to pay for your staff salary, to rent a shop and so on. So this is the amount, this is actually the capital. And then capital maintenance is actually, for example, you start out your business and you invest, say, for example, 4 million rupiah. Okay? And you do your business. After 1 year, now your money has increased from 4 billion to 4 million to 5 million. So you have an increase of 1 million rupiah. That will be your profit. Okay? So what you get in more than the capital that you invest initially, so that will be your profit. This is what we call capital maintenance concept. Yeah. So a company achieve capital maintenance. Say, for example, you invest 4 million rupiah. And at the end of 1 year, after you do your business for 1 year, now your money in the banks has increased to 5 million rupiah. So you are managed to get all your capital, correct? And you have an additional 1 million. So that will be your profit. Yeah. Okay. So a company achieve capital maintenance when the amount of its capital, which is 4 million just now, remains unchanged. And you, in addition to that, you get another 1 million rupiah. So that will be your profit. Yeah. So for capital maintenance, there are 2 types of capital maintenance. One is what we call physical and another one is financial. So we are focusing actually on the physical capital maintenance. So what is the financial capital maintenance? Is where a company earns a profit only if the financial amount of its net asset at the end of the period exceed the amount of at the beginning of the period. Yeah. So in terms of the financial capital maintenance, we look at the financial amount in terms of rupiah, how much. Yeah. So here we are going to exclude any contribution from the business owners. Yeah. So we are going to measure financial capital maintenance based on the nominal monetary. Say, for example, in Indonesia, it will be rupiah. In Malaysia, it will be RM, ringgit. Yeah. So when we look at the financial capital maintenance, we look at money, financial capital maintenance. Profit is measured. We look at closing net asset, and then we compare with the opening net asset. So that will be the what will be the increase. Yeah. So this is in terms of financial capital maintenance. But for physical capital maintenance, we are looking at the company's ability to sustain future cash flow. So we are also looking at the performance of the company. We are looking at the how efficient the company, how effective the company. So we are looking at the productivity of the company, the operating capacity at the end of the year. It must be higher than the capacity at the beginning of the year. So this is what we look at it in terms of the physical capital maintenance. Yeah. So both are actually very important. And then if we look at the, say for example, if we look at the can you see the PDF file just now? What do you see? Just what do you see now, Kartika?
Types of capital maintenance.
Okay, fine. Thank you so much. Okay, so I need to stop sharing, and I will just share the PDF. So the PDF file that I shared with you just now, you can see if you read more about the capital maintenance is in chapter 7. Yeah. So we have, oh, not here. Chapter 8. Okay. So in chapter 8, you will see the concepts of capital, concept of capital maintenance and the determination of profits. So this is also very important. I mean, in the past, there are a lot of arguments about which financial statement is more important, statement of profit or loss or statement of financial position. What do you think? Which one is more important? Should we start with the statement of profit or loss? What do you call profit or loss? Balance sheet. Do you call it balance sheet or profit or loss? Profit or loss. Which one is more important? Profit or loss ataupun statement of financial position? Of course, if you think the statement of profit or loss is important, you are right. And if, for example, Akmal think the statement of financial position is more important, Akmal is also right. Yeah, because there are actually pro and cons here. So therefore, that's why in the statement, in the conceptual framework, there is a specific chapter that discuss on the concept of capital and capital maintenance. Yeah, you can read later here. Yeah. If I move to this sheet, can you see the new conceptual framework 6 facts? So this is like a summary lah, ringkasan, yeah. What we have actually discussed just now. So what is the the first thing is that the conceptual framework is a comprehensive framework that discuss all the most important topics. Remember just now we start with the objective of financial reports. And then we look at the basic assumptions. Boleh ingat lagi basic assumptions? We have accrual basis and going concern basis. And then we have the third one will be the elements of financial report. We have assets, liabilities, income, expenses, equity. And then we have the recognition. How are we going to recognize? When are we going to recognize? And then measurement basis. So, and then not only that, we also have one section or chapter on the capital, the concept of capital and capital maintenance. So the conceptual, the new one, the revised conceptual framework is a comprehensive framework, yeah, that discuss all the most important topics that the International Accounting Standard Board need to think about when it set a new accounting standard. And it confirmed the objective. I mean, when we look at the objective financial reporting, it's actually the same one as the older conceptual framework, but it clarifies the role of stewardship. Yeah. So the objective of financial reporting is to provide financial information that is useful to investors and others when deciding whether to provide resources to a company. Yeah? So here, it highlight the important role, the stewardship role of the management. And then the third one, the conceptual framework emphasized that investors need information about both. I mean, both statements are important. Yeah? Statement of financial performance, which is the statement of profit or loss and other comprehensive income, and the statement of financial positions. Yeah. And fourth, here, because now kita ada new business platform, many companies are selling goods and services via online. Betul tak? Ada yang buat live TikTok lah, what do you call it? I don't know, in Malaysia we have Lazada. Do you have Lazada in Indonesia? We have Shopee, we call it Shopee PPP kan, Shopee, which is very, I mean, if you browse through and usually I will tell my daughter, do not look at Shopee, because if not, you will want to buy A and they want to buy B or C, or they are very good at marketing the product. So because of this new business transactions, the conceptual framework has actually improved the concepts of reporting for reporting assets, liabilities, income, and expenses. Yeah, because there are assets that we cannot see, which are the intangible assets, but we are going to recognize as an asset because we get economic benefits from that particular asset. So we are going to report it as asset. And then in the conceptual framework, it also introduced guidance on measurement. All right. So the new conceptual framework help us to decide when assets and liabilities should be measured using historical costs and when they should be measured at current value. Yeah. So we are going to choose the one which is the most appropriate for that particular asset or liability. And therefore, the conceptual framework will help the International Accounting Standard Board to set new standard. Yeah. But the conceptual framework, you have to remember, it is not a standard. It's just a guidance. Yeah. It provide up-to-date tools that will help the board in setting new standards. Yeah. So it will be the basis of the new standard, but it doesn't replace the particular accounting standard. All right. Okay. So I think what I will do now, I will share with you a link. It's for question and answer. I will share with you this link. Do me a favor. There are, okay. Oh, this is actually drawing. I know you won't see this. I'm going to share you a Google form. I've actually prepared several questions, just simple questions, just to see how far you have actually understood what we have discussed today. Okay. Do me a favor and answer those. You can actually check your answers right away, not a problem. But I just want to see how you do. Oh, it's too small. Is it too small? Let me see. Okay, can you see the link for Google form?
Yes, ma'am.
Can you for another 15 to 20 minutes, can you actually answer the questions?
We need a permit to
You need a
access
permit.
the,
Okay,
yeah.
you need okay, let me see. You need a permit, yeah. Let me see. Okay, let me see setting. Okay. Can you retry? Okay. All right. Give it a go. I will monitor your answers, but you can always, I've set the quiz so that you will be able to once you submit, you'll be able to get the scores. So I think you can actually turn off your camera if you want while answering the quiz. Just a simple questions, just for me to see and check how far you have uh, understood the topics. Okay, I've actually seen that. I didn't ask you to provide me with names. It does not matter actually. I've received 15 responses, meaning I mean I've noted down that there are 18 of you, so there are 3 more to go, but I'm very happy to see that majority of you managed to get more than 11 marks, which is very good. So basically, for question, what is the purpose of conceptual framework? I can see that you have no problem with that. Yeah, it's just that for the conceptual framework, the second question, the conceptual framework can override requirement in a standard. Is the answer is actually the conceptual framework can override. Let me see. Oh, everybody has actually submitted. Oh, one more. Okay. So when I look at the conceptual framework can override requirement in the standard, I say is false because the standard is has higher authority. Yeah. So the standard can override conceptual framework, but conceptual framework cannot override the requirement in the standard. Okay. The third one, revision of the conceptual framework will automatically lead to change in standard that are inconsistent. So that you look for inconsistent, that's why the answer is false. It should be consistent. Yeah. And then when developing requirement for IFRS standard, can the International Accounting Standard Board depart from the The answer is yes, only if it will help to meet the objective of financial reporting. Okay. And then for true false, I think you have to be very careful. Look at the word inconsistent, that's why it's false. It should be consistent. Yeah. Anyone has any question with regard to the quiz question? So I think those who choose the wrong answer is because of the word inconsistent. You overlook that one. Yeah. But majority of you managed to get more than, there are quite a number of you managed to get 15 out of 50, which is very good, excellent. Yeah. So I open for questions. If anyone has any question. Are you all okay? Because here in Malaysia it's about 1:30. Lunch break is 1 to 2. So it's already lunch hour in Malaysia. So in Indonesia it will be 12:30, right? 12:30. What time did you take your lunch? Kartika, usually? What time did you take your lunch? About now.
12. Yes, right now.
Okay. For the boys, when do you need to go to the mosque for Friday prayer? What time?
I think
Fauzan?
we should go now, man.
We should go now. Okay. I'm so
Yeah.
sorry. So we should end our session now. Thank you so much everyone for your attention. I really hope that you have learned something. And of course, if you have any problems, you can always ask me. I will see you again, inshallah, next week. Thank you, everyone. Assalamualaikum warahmatullahi wabarakatuh. Thank you, Dr. Sani. Have a good weekend.